Hello guys, welcome to another video. Welcome to another weekly breakdown video. Today I'm breaking down the backtesting data of second week of October. Here we can clearly see as we were approaching the markets, we can clearly see it was bearish, making bearish candles, and now it is giving a two bullish pin bars on the weekly time frame. What does it shows us is it is giving two bullish pin bars, clearly showing bullish momentum. And now next week what I will do is I will go with the bullish bias right here. I will go in the markets with a bullish bias, looking for buys throughout the week, and whichever day will align with us with our bias, we will trade with that. Whereas the opposite on DXY. And if I open the weekly chart, my analysis was there was a supply zone here which was not respected at all, so I deleted that. So just looking at the previous weekly candle, I decide my weekly bias. So next week I'm literally no need to overcomplicate it, no need to overcomplicate it for you. Just look at the last candle. The last candle is bearish clearly, so I'm looking for sells in the next week, and it's a clear bearish pin bar. I understand the candlesticks very nicely, thoroughly, and also the market is bullish. The overall market is bullish, and it's now kind of making a higher low. As we know, the market makes higher highs and higher lows. We understand market structure. So due to that, I was targeting this draw of liquidity for next week, and I was looking for sells. Whichever trades align with our weekly bias being bearish, I was looking for that. And the opposite on GBP USD, which I was looking for this. If I draw the fib level from here till here, I was looking for the lower high. As we know, the market structure, the market cannot go down forever. It has to make a lower high to then continue to the downside. So I was looking for that, and my analysis was, if I was bullish, right, for the next week, I have to target something, right? So I was targeting this fair value gap on the weekly time frame to fill the price, to go and fill up this fair value gap. Let's see if it filled up this fair value gap or not. It didn't. So oh no, wait. So that's the first day, second day, third day, filled up the fair value gap to the T and then rejected. Clearly we can see the market went up, filled up the fair value gap, and went down. Now let me show you what happened, how it happened clearly. Okay, I've already back tested it, so I will quickly show you. And now the weekly bias is clearly bullish to fill up this fair value gap on the weekly time frame. So my target is this one, this weekly fair value gap. So now if I close this, and also going on Monday, my bias is bullish because of these three white soldiers you can see right here on Monday. I'll not go in detail because I've already made that video. And three black crows here, three black crows going down, which is a reversal candlestick pattern, as we know, as we have studied about that. And also on the dollar, I'm looking for sells due to how this Wednesday, Thursday, and Friday candle closed. Doesn't matter what the overall market is doing, I trade my bias. What my bias is for that day, only that matters to me, nothing else. Because we are intraday traders, we are not swing traders, so we want to know what will happen on that day, what is higher probability of happening on that day. Apart from that, we don't care what happens. So now, as my bias is clear, now I go to the 4-hour time frame to look for market structure. So on 4-hour time frame, we can see the market is clearly bearish till now. Sorry, it's bullish. It has changed character somewhere around here. I had drawn this. Yep, you can see the market changed character here to the upside. Now let me close this. So when the market changed character to the upside, I'm also bullish. I'm looking for buys. There's a demand zone here, and so on and so forth. Whereas on DXY, there will be opposite. The market changed character to the downside somewhere around here, and there was a supply zone somewhere around here. I was looking for sells. So let me go to the 1 hourly and show you what I was looking for, which zones I was looking to trade from. Okay, so now let me show you Monday. My bias was bullish, so I was looking for buys. Okay, I will not show you exactly what I have already back tested it, so I know what I did, and I can do it again if I want. So yeah, on the hourly, if I show you quick analysis, this was the demand zone I was looking for, but this demand zone is too big, right? So it only makes sense to go and refine the zone according to the Asian range. So that's exactly what I did. So now let me show you Monday. First of all, first confluence was the market opened gap down. Sorry, the market opened gap down. Yeah, when the market opened, new day opening gap. Whenever the market is opening on the next day, it's called new day opening gap. As you can see here, it opened down, giving a down gap. And whenever the market opens gap down or gap up, it is most likely that the market will fill up the gap if it's with the bias. I have also noticed that with my previous strategy. So now what I was looking for was a buy from this demand. First of all, I was looking for a buy from this hourly demand, but it was very big. And also we have to adapt to the condition of the market. We don't react, we react and adapt. We don't predict. So we mark this M15. I marked this M15 demand zone here. And what happened next was history. Literally played out to the T. In this trade, we also learned that we have to give our stop loss room to breathe as the price can come back. Sorry. As we have seen that the price can come back and retouch that zone again. As we know, that's called inducement, just like it did here, and can make the move something like this. So on Monday, my bias was bullish. This was the demand zone I was looking to trade from. This was the M15 demand. Played out to the T. Got a beautiful buy right here. And now on to Tuesday. Let me show you what Tuesday did. So now I will just show you quickly, okay? Because there's no, I cannot explain every single thing in one video, right? So just show you the bias. Now the weekly bias is clear. I'm looking for buys. So whichever trades will be aligning with bias, weekly bias being bullish, will be considered at high probability. And if we can target the previous week highs and lows, then we'll also consider that. SMT, we have also seen SMT in this week following the market structure. There was, whenever we have a clear target in the market, very important, bro. Whenever we have a clear target in the market, being the previous week high, low, or any huge liquidity zone, now that becomes a high probability trade to take. And according to my rule, I don't trade anymore. I don't trade if the bias change in that week itself. So that's also one rule I follow. And on the DXY, I will just come to look at my bias so that the video is not too long. As we can see, Monday closed as a bearish pin bar. So no meaning until and unless the price shows me that it wants to go up. No meaning of us looking for buys. So I was looking for sells on DXY. And I was looking for GBP USD to go up. So I will also not show you which zones I was looking for to sell on DXY, because it will become a very big video. I will not repeat it again. So now I'm looking for buys on GBP USD, right? So now let me show you the H4 chart, H1 chart. Let me go to the H1 time frame. So this was Monday, and let Monday play out. So basically what I was doing was I was looking for buys from somewhere around here. I remember I was looking for buys from somewhere around here on Tuesday, but I don't know. Yep, I was looking for buys from this area. Okay, also there was a fair value gap. Now let me show you exactly why I took this trade. Okay, so the main zone was this one on the hourly, but what did I do? I went to the lower time frames and refined the zone. And also you can refine the zone to the M30 if the M15 is not clear. Sometimes the M15 zones will not be clear, but in the M30 time frame it will be clear. So this zone was clearly based on fair value gap. There was a huge M15 fair value gap. As I will show you now, it got filled to the T. It filled up the fair value gap. Asian low got taken. There was inducement before the main move. So many confluences coming together, showing that the market has higher probability of going up. And also my higher time frame bias was bullish, and the rejection got exactly perfect rejection as we want. And also this move happened exactly at London Open, which we want to see. We want to trade the London Open, which is 12:30 right now, because of the new day, because of the, what's that called, daylight savings in the USA. That's why we are trading 12:30 right now. When it will be November, it will be again 1:30 p.m. It will go 1 hour 1 hour above. So it was a fair value gap trade. This also shows that the fair value gap trades work too. Same concept, same everything. We adapted to the main thing is adapt the zones, adapt your order blocks according to the Asian range. If you can do that, you will be profitable 100%. And now Tuesday we were looking for buys, so obviously it played out to the T. And also now as this weekly fair value gap is coming so close, so on Wednesday what I was looking for was to fill up this fair value gap. The market can go down, up, doesn't matter, right? But what that does matter is the market can go up, as we know, fill up the fair value gap and then reject the fair value gap. If that happens, we will look for sells. Until then, we will not look for sells, still looking for buys because of how the candles are closing. And also on DXY, the market is just dumping to the downside. So when the market is dumping to the downside, we don't want to be the guy who predicts the bottom or predicts the top. So now what I did was I went to the lower time frames again and probably looking for buys again. As also on the 4 hourly, we can see the market is making higher highs, higher lows, higher highs, higher lows, higher highs. But also, let me show you the news. Sorry, on Monday, Tuesday, there was no news. Wednesday was CPI. So Monday, Tuesday, we caught beautiful moves. So the whole week, no need to trade, bro. There are so many high impact news on Wednesday and Thursday. So Wednesday and Thursday was not high probability day to trade, as we have also caught the move on Monday and Tuesday. So if you catch the move on Monday and Tuesday, you don't need to force a trade on Wednesday and Thursday, right? So what I did was I waited for Asian range to close, obviously, like I do, and I marked this demand zone on the hourly. I marked this demand zone. If it was not a high probability day to trade, to be honest, but if I was to trade, if I needed to trade, like some guys, there are some people, right, who needs to trade. If I was one of them, then I would have traded from this. I would have monitored this zone. But on Wednesday, nothing much happened due to news, and whole London session was consolidating. And I have also noticed that whenever there is CPI, NFP, huge high impact news, the markets tends to manipulate or accumulate. As we can also see, there was news. This was the news candle. This was PPI, which was in favor of USD. But we don't know, right? Any small factors affect the market, so we can't predict the news, obviously. So now going on Thursday was a very high impact news, CPI and GDP, both GBP and USD news. So it was best to not trade on Thursday, so I decided not to trade. But let me show you my analysis. On weekly time frame, we can clearly see the fair value gap now got filled. 60 to 70% fair value gap got filled. And if now, after filling this fair value gap, until and unless my bias is bullish, still now my bias is bullish because of how this candle closed above the previous high. You can argue, bro, there is a fair value gap here, okay, but until and unless the market shows us something like this, we are not looking for sells. I have told that a gazillion of times, and this is very simple yet very strong. And on the 4 hourly, if I see the market structure, it is going up, making higher highs and higher lows. Now on Thursday, it is best to not trade, but let's see. We have to consider everything in the markets, obviously. Just because the conditions are not good doesn't mean that we will not monitor the market, right? We have to see if it works or not, and only by failing we will understand that we don't need to trade CPIs, or we have to make rules. Okay, I'm gonna make the rules. I'm gonna refine my trading plan after this backtesting is completed, obviously. So now I was looking for buys. My buys were not clear, but if I was looking for something, it would be buys from somewhere around here. Okay, so I have not shown you DXY. Sorry, let me show you the DXY for bias purposes. So DXY also, the market was not doing much. It was a doji. It can continue down, it can go up, right? So the bias was not clear. There was news, so it was best not to trade. So I decided not to trade on Thursday. And if I decided not to trade on Thursday, not trading is also trading, bro. Not trading is sometimes will be more powerful than trading, because it will, if you don't have a clear bias, trading is not good because you don't understand what you're doing. That's the worst thing you can do in the markets. So Thursday, I let the market play out, and look what we can do on Friday. Just because we let Thursday to play out, now my bias is clear again. We can clearly see here the daily fair value gap here got filled, right? First of all, the daily fair value gap got filled, so we can delete that. On the weekly time frame, the weekly fair value gap also got filled, so we can also delete that. So now going on to DXY. Also, DXY has now given us a clear bias on Thursday. Monday, Tuesday went down looking for sales. Wednesday was huge news, so not a high probability to trade, but I was looking for sales. But now we didn't trade Thursday because it was not a high probability, not our bias was not clear. But now, just because we had patient, we were patient enough and waited for this candle to close, as opposed to not trade. Clearly we can see Now on Friday, going on Friday, my bias is clearly bullish. So now I can look for buys on Friday. So also if that will be sells on GBP USD. If I'm looking for buys on DXY, obviously the opposite. So there's a change of character right here. I can spot it directly because I've spent time in the market. If you are a beginner, you will take some time, but slowly but surely you can do it. So here we can clearly see there was a change of character here. Let me not do this. There was a change of character here on the 4 hourly. So this is Friday. I'm looking for sells, but also this trade I would not consider because of how the bias change in the week itself, right? I went to the bias. My higher time frame weekly bias was bullish, but this trade is not aligning with it, and it's changing. The bias is changing within the week. That's one of my rules, that I don't trade that, but let's see if it works. Why not, right? We adapt to the market. We are very flexible, but we are very rigid. Once I make a rule, I'm very rigid at it. Now let me show you one more thing. I'm looking for sales on Friday, right? So this is the supply zone that I can spot. I am damn sure that you can also spot this. There's a fair value gap here. It makes sense to do something like this, right, on Friday. But the markets are not perfect, and every time your analysis will not play out to the T. So what you need to do as traders is you have to wait for the Asian range to close, and then there can be a supply zone in this impulsive move here on 15 minutes, and also the market can make heavy move from there. So you have to be very adaptable in the markets. Only the species that can adapt will survive. So knowing that, now we go to the markets looking for sells. Obviously we'll wait for Asian range to close. After the Asian range closes, look at this. The hourly supply is so far away. Does it make sense for the market to go all the way up there and come there? No. The first answer is no. Also the Asian range was very below. So now what I will do, I will go to the M30 and M15 and look for supply zones. So this supply zone is still a part of this impulsive move, but the market can have a move from here. I have seen this and I'm doing this with experience. As you can clearly see, this is the M30 supply right there. The market, rather than going all the way up there to the hourly supply, it can have a move from this supply zone right here. There is also a fair value gap, market structure shift. The supply zone is with the bias. My bias is bearish and it's a supply zone, so it's a strong supply zone because of that reason. So now what I will do, I will go on the M15. I will look for sells from that area right there. So what did the price do? There was also on Friday, there was no news, I guess. Friday there was BOE Gorman Bailey speaks and prelim consumer sentiment on 7:30 p.m. So what I did, I took the trade somewhere around here. It was a beautiful trade. It swept the liquidity from this 21:30, which is 9:30 p.m. New York session. And also I've noticed one thing: the order blocks made on New York session tends to get the move from New York session, and the order blocks made on London session tends to get the move on London session. I've noticed that. And also the order blocks made in the session in London or New York till zone timing, those are more stronger than the other ones. So this trade was a winner. As you can see, the bias did change in the week itself, but even though it was a win, so a win is a win at the end of the day, right? So also please adapt to the markets. Don't predict the markets, adapt to the markets, then you will 100% be profitable. Look, I marked this hourly supply zone, fair value gap, no problem. You marked it, but the market didn't respected it, so you quickly adapted and marked the closest supply zone. If this supply zone was not respected, what I would do, I would mark this fair value gap, again this supply, and I would monitor this zone right here. And if what I wanted to see was there on the charts, then obviously I would look for sells. And also this was the M30 supply, so the rejection also happened on M30. As you can see, I've also noticed one thing: if the supply zone is M30, sorry, the rejection can also be on the M30 time frame. So there are small things. If you can gather all the information and only trade with the bias, with the trend, and continue doing the same thing again and again, you're gonna master this shit and change your life, bro. Best of luck.